Hello everyone, this is Alvin from Dr. Wealth and Happy New Year! In this 2021, I have 21 stock ideas for you to consider. I hope that you find these ideas interesting and most importantly, make great wealth for yourself in this new year. Before the rundown, this is the usual disclaimer, pause and read it if you need to. Okay, let's continue with the countdown. Number one, I'd like to talk about Alibaba, and as you know, it is having a lot of heat right now from the Chinese government. Ever since the Ant Financial being pulled out from its IPO, Alibaba has a smooth journey from then on. It has been investigated by the government for anti-competitive behavior, and who knows, right? More bad news may come, and the share price have already dropped pretty much. From the top of 300 over dollars, it has dropped till at the low of around 210, right? That's like a 34% drop from its high. Okay, and nobody knows whether it will go further lower or not, right? But it seems quite value for money at this point in time. But of course, if you really want to invest in this Alibaba, you have to believe that eventually they will still be allowed to do most of their businesses and conduct their businesses in the near future or even to the long future. All right, because otherwise, if let's say the government really intervene and break it up, it may be not so good news for the shareholders. So there is definitely some risk towards it, alright, but it depends on your viewpoint. Okay, so Alibaba, some believe in it, some don't, right? I don't know what's your stand, but this is definitely one of the most watched stocks at this point in time. And number two, I will say is Tencent, okay, because it is another obvious target of the Chinese government. After they go after Alibaba, it's very obvious that the next target will be Tencent, given its influence in China as well. All right, and you also have a very huge fintech arm, okay, that can rival that of the Ant Financial. All right, and WeChat is also a very important communication platform for all the Chinese, not just the Chinese in China, but the Chinese all around the world. All right, and it also have a very strong influence in games. Okay, it's the largest game company in the whole world. All right, and the influence can also be expanded beyond its own operations towards its own investments. All right, this is just a tip of the iceberg of the investments that they have made over the years. All right, they are into electric vehicles, ride hailing, and even the future air taxis or whatever. Okay, and e-commerce as well. They have stakes in like Meituan Dianping, JD, SEA, as well as Pinduoduo. They are into media, music, movies. They are also into streaming. Almost they have a stake in all the major streaming companies, streaming platforms in China. So Tencent influence is really very huge and overarching a lot of industry and its sectors. So I do believe that if more intervention from Chinese government, it may spill over to Tencent, and that may worry some of the investors and cause them to sell it down lower. So Tencent may become cheaper, but relatively it has dropped less than what Alibaba has experienced in the past few weeks. Okay, and this is it has dropped about 18%, all right, from its high of 630, okay, to a low of around 505, around that number. All right, so you can see where's Alibaba has dropped more than 30%, okay, in the past few weeks. So Tencent does have some impact already, but we are not sure, right? If let's say there are more bad news, is in fact maybe it's a good news for some of us to pick it up at a cheaper price. Number three is also another Chinese company, Lufax, but this is listed in New York, okay, not in China or not in Hong Kong. All right, it went ahead to IPO. It was supposed to IPO around the same time with Ant Financial, okay, but IPO for Ant was pulled out. Somehow Lufax went on to list in New York. Okay, so Lufax is also in the fintech business. All right, they do lending and they do wealth management. Right, they don't have a payment system, but they do have the lending and the wealth management products that are similar to what Ant has. Okay, so there will be two headwinds for this company. One is that the lending business, okay, is something that the government is probing Ant Financials on, right? So it may have a spillover effect if they decide to regulate on that. And US delisting bill, because this is listed in US, all right, and you know that the Chinese, not Chinese government, the US government has been thinking of cleaning up the Chinese listing that are in US, right, to prevent lousy companies or fraudulent companies from listing in the US. And they signed this bill, it's passed into law, and the first move was to remove that 3 telcos that were listed in US, right? So it could be, if let's say they scrutinize and they find something that they don't like, they may also force Lufax to delist, right? I think that risk is remote, okay, but it's not impossible, all right? So that's why I put 2 headwinds over here in this slide. And it's backed by Ping An Insurance, which is a major substantial shareholder of Lufax. It's actually a spin-off from the insurance company, okay? And because it came from finance, it has the experience, all right, to operate in a more regulated environment. Okay, so I do think that this is an advantage where Lufax have over Ant Financial, right? Because it's already backed by a proper financial institutions that is operating in China for so many years or decades. Okay, so they definitely know how to play the game better. All right, so I do think that even in the lending business and things like this, they should be able to go on the right side of the law a lot better than what Ant is experiencing right now. Okay, but of course, relative to the other 2 companies, all right, Ant Group as well as Tencent, their fintech arm is a lot, their size of their business is smaller than the 2 giants. Okay, so in terms of lending, they have about $79 billion loan being carried out, all right, but compared to Ant Group of 300 billion or even Tencent with 500 billion is quite a small number. And as well as the asset under management, all right, Ant Group is a lot bigger with 600 billion worth of investments under them, whereas Lufax only have 57 billion. Okay, that said, Lufax is not like a super mini player, all right. It is still a listed company, and it's not that far off, right, from the 2 big giants. Okay, probably the 3rd place, I believe. All right, then maybe the 4th, 5th, 6th position are not even close to what Lufax is looking at. Okay, so I do think that these are the big 3, all right, and precisely because the focus have always been on the first 2, it has been neglected. Okay, pretty much neglected, and that results in quite a decent PE ratio, I would say. Okay, given that it's a fintech company, and a lot of tech companies are valued at very, very high multiples today, and yet their PE ratio is based on estimates, future PE ratio and current is about 14 to 18 times of its earnings. So it is not expensive in that sense, right? So I do think that the market is overlooking this potential of the Lufax, okay, and then that's why pricing it at a very low multiples of its earnings. Okay, and number 4 is Hong Kong Stock Exchange, all right, or Hong Kong Exchange. This is listed in Hong Kong, of course, and why I would think that this is a good stock to consider is because a lot of companies from China are beginning to list in Hong Kong. Okay, a lot of previously US listed companies like Alibaba, JD, NetEase have started to list in Hong Kong as well, right? That is probably in preparation of the potential delisting of this Chinese company in the US exchanges. Okay, so the beneficiary of this move will be Hong Kong. Okay, and that is also why I see the reason why Ant Group prefer to list in Hong Kong and Shanghai instead of US. Okay, whereas the parent Alibaba went straight to US, and then now they came back to Hong Kong, right? They maintain 2 listings in US and Hong Kong, but whereas for Ant Group, it just went straight to Hong Kong and Shanghai. So I do believe there is some impact of these US delisting rules, right? So that such that they just save the trouble. Why not list in Hong Kong? And Hong Kong is a very recognized international exchange of the world, all right, so it's not that shabby after all. Okay, and Hong Kong is also playing a much more important role compared to the past. Now foreign investors can buy Chinese A shares, that means shares listed in Shanghai or Shenzhen stock exchange, but the only way to get it is to go through Hong Kong exchange. Okay, so then it becomes a very important conduit for the international crowd as well as the Chinese markets, and it is also a top IPO exchange. All right, it has been able to beat the US markets. right? In the past 5 years, 3 out of 5 years, they are the number one in terms of the amount of money raised via IPOs. So Hong Kong Exchange, I believe that in more years to come, they will benefit from the rise of China, and more Chinese company will also start to list in Hong Kong Exchange. Okay, so the market has also seen the potential of it, and you can see that just this year, right, this is a year-to-date chart, Hong Kong Exchange share price have gone up 68%. By 68%. Okay, so definitely still on the uptrend, and this is something that investors have also taken notice. All right, but I do think that there are more good news probably to come, more listing going to come for Hong Kong Exchange. And not at the right price precisely because investors have taken notice, as I said. This is their PE range, okay, of the past 5 years. The current PE is about 51, right, whereas the average is about 39. All right, so one way is that you can wait for maybe a market correction or some temporal news that if you can go back to this PE of 39, that will be a very good entry price for your Hong Kong Exchange. Number 5, let's go to US, and that's Facebook. Similar to the Chinese tech companies, US tech companies are not having a good time as well, and Facebook is one of the worst. They just received like a lawsuit from the US government as well as the 48 states. Okay, that's like almost every state already. Okay, in the US, sued for anti-competitive behavior, right? And I do think that, you know, it is precisely they have this kind of monopolistic power that makes a business very good, because it's so difficult for other competitors to come in and take the market share from Facebook. It's the most popular kind of a place in the online world, right? There's over 2.7 billion people. Right, 2.7 billion people using it actively. That is like easily the largest country in the whole wide world. All right, it's almost like your China plus India together. Okay, so I do think that Facebook has really have this monopolistic clout, and a lot of businesses, right, have no choice but to advertise on Facebook in order to reach this number of people. All right, so it has become very valuable, and I don't think that just by having all this lawsuit you can change it overnight, unless they go very drastically, break it up. Otherwise, I do think that Facebook will still have a potential. This I see is more of a short-term challenge. All right, maybe they will be fine a big time, okay, or maybe they will be more controlled with certain policies. Okay, but I do think that in the long run they should still do well. All right, they have a lot of properties like Facebook platform, Messenger, WhatsApp, as well as Instagram. All this has been a daily requirement for a lot of people in this world. And some other bad news is that Apple has also given the users a choice to be tracked by third-party apps like Facebook. That means they will ask, and user can choose not to be tracked, right? Who likes to be tracked, right? Everybody is talking about privacy right now. Okay, but Facebook thrive on collecting user data so that they can push more relevant advertisements and to help advertisers target the audience that they want to look for. All right, so it is actually a very important thing. Okay, I will see this is a bigger threat than just the lawsuit. Right, in fact, this is a bigger threat because especially in the US, Apple OS or iOS is a major platform. Unlike the rest of the world, it's more on Android. Okay, and that may cause Facebook to lose some of the premium in its advertising capabilities. Right, so all in all, I do think that in the long run they will still be able to survive all this. Okay, and this won't be the last bad news you're gonna have. Right, so some years down the road you're gonna see more issues. Okay, but I do think that they will be able to go from strength to strength, right, and meet these challenges along the way. Okay, and the good news is that the share price has come down significantly. Okay, or it has not really gone up after the big jump since COVID-19 recovery phase of the COVID-19. All right, so the average for PE ratio for Facebook was about 65, and now it is at 31. It's close to the 1 standard deviation down, right, from its average PE. So it's not expensive. I wouldn't say it's like very cheap. Okay, I just think that it's not expensive. Okay, it's close to its 1 standard deviation below its average PE ratio. Number 6, Alphabet, all right, another company that got lawsuits from the US government as well as the other 11 states. So it has a smaller problem than Facebook at this point in time. But they've been also accused of this anti-competitive behavior by paying billions of dollars to other companies to make sure Google is the default search engines, right? Like they pay Apple billions every year so that, you know, they will put Google search on iPhones. Okay, and I don't know about you, but I'm a heavy user of a lot of Google products like Gmail, Drive, Calendar, you know, almost what you see over here. Okay, I use them and more. All right, so I do think that they also have a lot of clout over user behaviors and user data. So I do think that some of this targeting are right, okay, and to really rein in some of the powers that they are having. Okay, but I also believe that this will not hinder their progress to become bigger and stronger in the future. Okay, as for their P ratio chart, okay, it's more fairly valued. Average is about 38. Okay, average P is about 38, and now it's about 34. So it's not expensive and it's not cheap either. It's just fair price. Okay, so nothing wrong if, let's say, you want to nibble at a fair price. It's also fine. Okay, but this is what it is at this point in time for you to consider. Number 7, Salesforce. Okay, this is interesting company. All right, it's probably one of the early adopter of cloud software as a service kind of a business model, and it has succeeded very well, right? And then they use the money made and invest in a lot of younger companies to keep up with times, right? They have invested in like DocuSign. They have also invested in like Dropbox, Evernote, some of the ones that they are familiar to use. Some probably are not. Okay, like Stripe, they have a stake in it as well. Twilio, Workato, all this. As well as Zoom is not here because I believe that they sold it, right? But they made $1 billion from that. Okay, so they made a lot of early investment in all this focus in software as a service companies. All right, they invested in a lot, and some has listed. I think Anaplan has also listed, if I'm not wrong. Okay, and a lot of this has grown very fast, and you can see more windfall coming along. Okay, and they also recently announced a big investment into acquiring Slack and taking it private. Okay, whereas for most of the investment they've been doing has always been early stage investment, and then when this company grow, they get listed, they get a windfall. Whereas Slack has went listing first, and then now they are going to privatize it, so it will cost them a lot more, $40 billion if I'm not wrong. All right, so the market doesn't really like it, and they press down Salesforce price, and the price haven't really risen since the announcement was made. Okay, so I do believe that in the next few years, some of these companies will go listing. You know, they may have see more good news, and Salesforce will be able to benefit from all the investments that they have made in the past few years. Right, they've been silently making all these things, all these investments, and they probably going to bear fruit in the next few years. Right, that will keep them also up to date as a number one kind of leader in a SaaS kind of a business model. Right, and this is almost like what we saw just now in Tencent. A lot of investment, the portfolio value is actually very high. Okay, in terms of its PE ratio, or in this case I use a PS ratio, right, because it's the earnings is not as strong as Facebook or Google. All right, but we'll use revenue, which is a more stable stable number, right, over the years. Okay, and price sales ratio is about 10. Okay, it is not the exactly cheap. All right, even though the share price have came down. Okay, so the low was around 6.5. Okay, the low was around 6.5. So the in between would probably be about 8. Right, 8 looks more fair price. Okay, a price to sales ratio of 8 looks more like a fair price. So even though share price have came down, but it's not cheap enough. So probably you can put it in a watch list and see what happens next. Number 8 is S&P Global with the ticker SPGI. This is in the finance business, and all of us are very familiar with the index called S&P 500, and that index is owned by this company called S&P Global. Okay, so it has 3 business segments. One of it is ratings. That means it's like competitor to Moody's and Fitch, that they give credit ratings to companies who want to rate their bonds. right? So they make money from there. And indexing, like what I mentioned just now, S&P 500 index, all these indices, when every time a ETF uses it or any fund that benchmark its performance against its index, they get paid royalties, right? So I do think that it's an excellent business, okay, because you just create the index, get it famous, and then people start using it. You just keep collecting these streams of business, streams of revenue. And lastly is the data platform like Bloomberg, right? They have this Capital IQ, right? S&P Capital IQ that they sell to financial institutions, professionals, right? So they have these three businesses, which I do think that very lucrative, right? It's highly scalable, and it doesn't cost a lot as in it's really a fixed cost, right? After they invested the fixed cost, any additional things that they sell doesn't involve a lot of variable costs in those things, right? So I do think that these are very good businesses to have. And the recent news was that they are going to acquire this IHS Markit, which is another financial data company. And after that acquisition, is going to be a merger, right? And it will make S&P Global the largest financial data company in the world, right? If not one of the largest, okay? Nobody have came out with the data who is the largest, right? But IHS Markit is also a very huge company in Europe that's dealing with financial data, okay? So in terms of the P ratio range, all right, also not exactly cheap because market has ran up pretty much since after COVID-19 struck and the market bottom and it just went straight up. So S&P Global is around 32 times earnings, all right. The lowest was around, I think, 15. Okay, so maybe the in between is around 20, right? So if the price is coming down a bit more, it will look more interesting. But now I do think that it's a little bit more on the overpriced side. Okay, number 9, MicroStrategy. Maybe you have not heard of this company before. This is interesting because we all know that cryptocurrency has been doing very well, especially Bitcoin has gone up quite a fair bit in the last 1 year. Okay, and it seems like people are warming up to Bitcoin once again since the 2017 crash, 2017 hype. Okay, now Bitcoin is back and even crossed the high in 2017. Now it's almost $30,000 per Bitcoin, whereas prior to that, 2017, the high was around 19,000 plus, even shy of $20,000, right? So but a problem is that a lot of people don't know how to get into Bitcoin, and they find, hey, can you trust the exchange and this like that? It sounds very troublesome. One way to proxy your investment in Bitcoin is to invest in companies that buy Bitcoin. So that's why this MicroStrategy came about. And I don't know whether he's the founder, but the CEO, Michael Saylor, okay, he used to be a skeptic, right? You can see in 21.3 he said that Bitcoin days are numbered. They'll suffer the same fate as online gambling. Then in 2020, he said that they're going to invest $600 million in Bitcoin, 100% in Bitcoin and nothing else, right? So from a skeptic, he became a believer. And MicroStrategy has a lot of Bitcoin, right? So it's a proxy bet for Bitcoin, and they have already invest more than $1 billion in Bitcoin in 2020 alone, and now they have about 70,000 Bitcoins. Okay, so if let's say the Bitcoin prices continue to skyrocket, right, that means MicroStrategy value will shoot up as well. Okay, and the share price should follow because the underlying value has gone up, right? And they acquired an average price was around 15,000. Now it's about double already. Okay, so if you go up some more, there'll be more upside, right? So I do think that this is a proxy play for Bitcoin, such that the investment is more valuable than its underlying business, which is not that bad. It's also a software company, right? It's a tech company. Okay, but the Bitcoin is an interesting investment. Okay, number 10, let's go to Singapore. All right, and I shared about this Centurion in our drwealth.com website, our blog. Okay, a few months down, few months before, right? But I do think that the investment thesis hasn't changed. Okay, it's the largest workers' dorm operator in Singapore, right? And for some of you who are foreigners watching this, okay, is that a lot of the COVID-19 issues or cases happen in this workers' dorm, and naturally Centurion being the largest operator, right, got hit. Okay, in terms of his share price, so his stocks got beaten down. Okay, and he hasn't recovered by much since then. Okay, so I do think that they are still a critical infrastructure provider, because we can't do away with our foreign workers. A lot of them are in the construction sector, and they need to build our houses, they need to build our highways, our MRT tunnels. They are too crucial to our constructing our infrastructure, and there are a few hundred thousands of them. Okay, so it's not easy that we can just do without them tomorrow. All right, and that means that Centurion will continue to play a very important role, okay, going forward. And their share price is in terms of their value, okay, underlying value, right, versus the price multiples, okay, they are definitely at the low side, right? In terms of P, is the lowest in the past 5 years, just P3. Okay, in terms of price to book, is also the lowest at just half of its book value. And then even its dividend yield has shot up to 5+%, right? Maybe they'll cut some dividend going forward, because maybe they have to spend more to improve the living conditions, etc. But all along they range around 3 to 5+%, right? So I do think that it's definitely one of value play, and this is like a recovery play. If let's say the situations get better, right, they may report better earnings, or maybe the sentiments of the investor will improve again towards Centurion, and that may also cause the share price to go up as well. All right, number 11, TalkMed. This is oncology's medical service. Okay, it has a lot of revenue lost to medical tourism, all right, because people cannot travel to Singapore to seek treatment for their cancers, okay, because the borders are closed. All right, so this is also another recovery play, because as the vaccine improves, right, in terms of the coverage, then the travel may resume, right? And I do think that this is better bet than betting on the travel directly, because again, this is a very indirect recovery play for the travel sector. Okay, it will benefit companies like TalkMed when the medical tourists start to visit again. And they are more stable, because even without the medical tourists, they are still making money. The locals will still seek treatment because it's necessary. All right, whereas hotels and flights, they are more frivolous and more competition, whereas for TalkMed, they are one of the number one in terms of oncology medicine, and pretty famous in the region, and they will definitely get a lot more business when the borders are lifted. All right, okay, so this shows their first half earnings, revenue and earnings, which were impacted by the medical tourists, right, for about at least 3 months, okay, and the revenue dropped about 13.5%, right? So I would say that there's still a lot of local support for this, okay, business. All right, in terms of its PE range, okay, average is about 21, okay, now it's also about 21, so it's fairly priced, right? It's not exactly undervalued. There was a period where I talked about it, it was pretty much undervalued, but then the price bounced back up a little bit, okay, now and then the earnings dropped for this year, right? So that's why their P ratio shot up now to about fair price, okay, but if they improve, then the earnings improve, then that P ratio will drop again, okay, so it's pretty dynamic in that sense for this kind of recovery play. Number 12, Fraser Centrepoint Trust. This is the first REIT that we are going to talk about, okay, in this presentation, right? And Singapore loves shopping, okay, and because we are such a small place, we have very little entertainment, and malls are usually a place where Singaporeans go and unwind, window shopping, have a nice meal, catch a movie, get some of the errands done, etc. All right, so a lot of malls are actually very busy, even during the COVID-19 period, where people are working from home. Right, they started to go into a mall nearby, so we call them the heartland malls, right, instead of the malls in the city, because they are not going to the city to work due to all the work from home policies. And then all these heartland malls became very, very crowded, and the business are actually pretty good, right? And I take a walk around this kind of few malls, right, I don't see a lot of shops closing. There were some, right, but majority were still bustling and having a lot of customers. And I do think that these heartland malls are pretty resilient even during these times, right? They are very integral to the Singaporean lifestyle, and I do think that in the next 10-20 years they should still continue to do well, in this small tiny island of Singapore, okay. That in terms of the price multiple, right, price at around 246, okay, and NAV is around 227, right, so it's slightly above the book value, okay. Excuse me. So I still think that this is fairly priced, right, at about price to book value 1. It's not expensive, not cheap. Okay, so throughout the presentation, you realize that some are overvalued, some are undervalued, some are fairly valued. Okay, so do take note before you just anyhow press a buy button. Alright, so do remember to do a check on the valuations first. Number 13, Keppel DC REIT. This is the second REIT that we are talking about. Is the best performing REIT in recent years in Singapore, right? Caveat, like in Singapore. Okay, and data centers are going to be more important as cities are getting getting smarter. You want more connection, more data flow. That means that all this bandwidth are necessary, and more data centers are needed to house all these servers. Okay, and all the IoT, right, Internet of Things, where definitely the amount of data transmission has to go up, and with all the 5G that's coming up. Okay, and we are not going back, right? We're just going to be more digitalized as we go forward, and truly the demand for data center real estate will increase. Okay, so it's not about housing people anymore. In the future, it's about housing servers, right, which are more important than your office or your other things. All right, so like work from home, right? Data centers are more important than office. Okay, so that is the trend that we are going to see in increasingly in the coming years. It's also one of the most overvalued REITs in Singapore, right? The average price to book is about 1.8, then now it's about 2.4 for the current price, right? It's at 2.4 times of its book value. Okay, so I guess wait for a good price to enter, right? Who knows? Maybe corrections along the way will bring down the price to that level. The third REIT that we're looking at is number 14, CapitaRetail China, right? So they have a lot of properties in China. And China is one of the earliest country, if not the earliest, to recover from COVID-19, and they have already seen a positive GDP growth in 2020, while a lot of other developed countries are still negative, right? Like Singapore is still like -7% contraction, right? West China is plus, I don't know how much lah, but it's definitely in the positive territory. Okay, and then a lot of malls, right? So the rising affluence of China will have some spillover effect for this CapitaRetail China, right? So more spending, they visit the malls more, they buy more stuff, tenants make more money, then the landlord can increase the rent further. Okay, so it's on the right of this rising affluence. And recently they also expanded their mandate to include not just all the malls, but also to office, to business parks, to logistics, and data centers, which you just mentioned, right? Data centers is going to be more important. So with this good mix, right, then it's really a very good play, good China play, right? You just buy one REIT, you get exposure to entire China in terms of its real estate. Okay, so I do think that this looks interesting. Okay, in terms of the valuation, likewise the share price have rebounded even after the rights issue. So there was a period that was pretty undervalued, right? The price to book was below the one standard deviation. Okay, the fair value was around 0.96, very close to 1, and currently it's at 1.04. Okay, it's actually a very tight range, right? It's actually a very, very tight range in terms of this CapitaRetail China, between 0.85 to 1.07, right? So there's a very tight range for its PB ratio. Okay, so which means that you can actually wait for it, because the chances of it hitting the other side of the band is actually quite frequent, right? So you can definitely be more patient and wait for a right price to enter. Number 15 is not exactly a stock, but is a group of stock or a basket of stock. So I also wanted to include some ETFs to bet on certain sector and themes that may be good in the coming years at least. Okay, because especially in this kind of new fields, it's very difficult to tell who is the winner, right? Investment is important to buy the winner and able to capture market share and defend its market share, right? But in the early stage, nobody has really captured the full market share yet, and it's hard to tell the winner. And I will always prefer to go with sector exposure. That means buy the entire sector rather than bet on one company. It's too unproven, right? It's too risky in my opinion. Okay, so we know that biotech has been one of the key theme in 2020, right? COVID-19, the problem or the vaccine was developed because of our biotech research. and it's also the first mRNA vaccine, right? Which is different from the previous vaccines that we have ever seen before, and that is only possible with biotechnology, right? And I don't know about you, but I do believe that even if we defeated COVID-19, right, in the future we're going to meet another one. It may be COVID 2023, COVID 25, COVID 30. It will come back. Okay, it will come back because virus mutate faster than humans, right? And the only way for us to save the humans is using biotech. So it will play a much more increasing important role in the coming years, right? And there's no medicine that can cure a viral attack. Okay, just in case you may have a misconception, right? We can only rely on our antibody to defeat it, right? To identify as a foreign body, okay? But the only way to identify a foreign body, we need to have a library of definition of these viruses, and that's why the vaccine is to trigger the defense in our antibody, such that if we really meet the real virus, our antibody will be able to defeat it. All right. Okay. So I do think that this SPDR S&P Biotech ETF, the ticker XBI, is something that you can consider if you really think this is a new theme and an important theme to take advantage on as an investor. All right, do check it out. Okay, and it's done very well this year. It's gone up 50% since the start of the year. And mind you, this is not an individual stock. This is a basket of biotech stocks. So it's not just one or two biotech stock that have done well. In fact, the entire industry has done very well in terms of its stock price in this 2020. Okay. Number 16, another thematic play is the clean energy, iShares Global Clean Energy ETF, ticker ICLN. Clean energy is also one of the best performing sectors in 2020. All right, it has been seeing that world leaders are more serious. Like China just pledged a lot of targets for clean energy and reducing of fossil fuels. And then we have a new U.S. president, which is Joe Biden, right? And he's known to care more about climate change, which is unlike Trump, he pulled out from all these climate talks. But Biden is probably going to spearhead and lead US and the world into progressing these climate change policies, right? So I do think that this clean energy will be a very serious play for the next few years to come. All right. And done very well. Okay, the ETF, this iShares Global Clean Energy ETF, has gone 139 times, not 139 times, 139%. Okay, in 1 year, right? Again, this is an ETF, it's not a single stock. Right? So it has done very well. All right, and a lot of investors have caught on as well. Okay, so if you are an environmentally friendly guy, this might be one to consider. Okay. Number 17, ETFMG Alternative Harvest ETF. This is on cannabis, right? So there are a lot of companies that are dealing with cannabis. Some are medical, some are for recreational use. It has been legalized in Canada in 2018. That led a wave of companies to benefit, as well as the share price has gone up in those days, right? But it's coming down. But I do see there may be potential to see a bull run in cannabis stocks again, because Biden is also a positive for legalization in the US. Alright, so a lot of people are talking about it. Okay, in fact, in US there are some states that are already legalized, right? Especially in the western part of US. Some states are for medical purposes, is decriminalized, right? And some are still fully illegal, right? But Biden, once he get voted into the office, he may push it for a nationwide kind of decriminalization, right? Or even to the point of legalization for cannabis, and that will give a boost for these cannabis stocks, right? It has been a mixed bag. Okay, it has been mixed bag. This year hasn't done very well. The whole ETF is down by 62%. Right, it's down by 62% from the start of the year. But since it has also you can also see on the other side that it's recovered from the bottom during COVID-19. All right, by about 16. Oh, I'm sorry. It has gone down by 16% this year, but it has rebounded from the bottom by 62%. All right. Okay. So these are the figures. So it's not that expensive compared to the other two that I showed you just now. Like whether it's the clean energy or the biotech, they've gone up a lot. Whereas this doesn't look that expensive at this point in time. Okay. Number 18, ARK Innovation ETF, probably the hottest ETF in 2020. I see a lot of people talking about it in social media. A lot of people are warm out to it. They think that this is the ETF to buy. This is something different because this ETF is actively managed. Right, sorry for the spelling. Right, it's actively managed. It doesn't follow index. Okay, so they do pick their own stocks. So it's almost like a hedge fund, but they are listed as an ETF. So they are selling you hedge fund services at ETF prices. Right, so you get quite a good bang for buck. And it's a lot outperform a lot of funds, even the hedge funds. They're charging a lot higher fees, right? So this is a godsend for a lot of retail investors. And the star fund manager will be Katie Wood. Okay, she's getting a lot of publicity right now. To be fair, she has been pushing for a lot of this kind of disruptive technologies for many years, and this is a fantastic year for ARK because yes, their ETF has also gone up about 100% or more. Okay, yeah, definitely. So this ARK ETF has gone up since the start of the year by 151%. Okay, easily one of the best performing ETFs out there. All right, they have a couple of ETFs, but I do think that this is a more diversified to various field. Right, they have like autonomous vehicle, biotech, all this. Even though they have separate other ETFs, but this is the more overarching one, and this is the most popular one. All right. Number 19, don't forget our plain vanilla S&P 500 ETF. Okay, if you still want to bet on the US maintaining its superpower status, it still have a lot of good innovation that's coming. Right, still the superpower is still the leader in innovation. Don't write off US that soon. All right, and this S&P 500 ETF has always been the core ETF. In fact, the biggest ETF in the world, right? So this is more for long-term investing. As long as you believe that US is continuing to lead the world, right? S&P 500 ETF will not go wrong. Okay, even for COVID year, it's done well. It has surpassed its high this year. All right, creating and ending the year at a new high. Okay, near a new high. It has gone up about 15% since the start of the year, as though COVID-19 has never happened, right? But we all see this super big dip during the March-April period, okay? But it has recovered, right? It shows the resilience of the US stock market. And for those who want to bet on China, you can consider this iShares MSCI China ETF. Okay, as I said, China has recovered from COVID-19 faster than any other countries, and it's a rising power to rival that of US. And in China, there are a lot of different kind of listing, right? So you have A shares in Shenzhen, Shanghai, and then you have H shares in Hong Kong, and then you have ADRs in US, right? So China is a bit unique in the sense they are listing all over the place. Whereas you see that a big US company usually will just list in US. It makes investing into US a lot easier via ETF. But for China, it's a bit difficult. And what I like about this MSCI China ETF is that they will just invest across all these countries, right? Regardless where they are listed, whether they are listed in US, Hong Kong, or anywhere else, as long as they are big enough, right? They play a big enough role. This index will put the company in it. Okay, so this is one good way to get a broad access to Chinese companies, right? And it's done very well as well, right? Did even better than US S&P 500. It has gone up 24% this year. Last one, but not least, number 21, VanEck Vectors Vietnam ETF. Okay, so some say that US and China even China is even though it's a developing stage, is close to being a developed country, the growth has slowed down. Let's look at some countries that are growing even faster, right? So that some will start to look at Vietnam, right? But Vietnam is not easy to invest into. It's a much smaller market, not so developed as compared to the developed nation, right? But they do have certain characteristics that looks good. A very huge young population, right? It has about 100 million people, and the median age is only 33, and which means all can really contribute to the GDP growth of Vietnam in many years, in the next 10-20 years. right? At least. Okay, and the GDP growth is rate is 7% in 2019, right? Maybe lower in 2020 because of COVID, but I do believe that they're going to recover from there and grow from strength to strength. And you also will start to notice a lot of the manufacturing has started to shift into Vietnam as well, right? That will also give rise to the affluence in the middle class in Vietnam as well. Okay, so if you don't know what companies to look at, then one of the better way is to bet on the entire country. And I can only find this ETF that invests in Vietnam. There's only one, right? It's this VanEck Vectors Vietnam ETF. Even this year it's gone up, right? Despite of COVID-19, it's up 9%. Okay, so it's not that shabby after all. All right, but it's not just a one-year thing. I do think Vietnam is going to be a multi-year play. Okay, and so thank you for watching till the end. And this is the overview, the 21 stocks for 2021. All right. I'm not advocating that you just blindly follow. In fact, I would discourage you from blindly following all these stocks that I mentioned. Okay, I do think that you need to suit your objective. Right, so you need to at least find the ideas interesting and do some work. Okay, because I just briefly scanned through these 21 stocks. It's important that you go and dig some of these numbers and their history to understand better. Because in investing in conviction is very crucial. Right, just in case maybe the stock price after you enter it go down. Right, do you have the conviction to hold it, or even do you have the conviction to buy more? Okay, do you think you're right or you're wrong? Right, so it's very important to do the homework and not just blindly follow all these stock ideas. But regardless, I hope I have given you some ideas how to proceed from here. Right, at least in this 2021 you will be able to start off with something, right? And I hope that it's going to be a prosperous year for you and me. And thank you for watching. Give us a thumbs up if you like this, and give us some more support, and so that we can feel more motivated to do more videos. And leave your comments in the box below, right? Let us know what you want us to do, what videos you want us to share in the future. Thank you for watching, and good luck.